Okay, let's start with Nifty 50 analysis for today. As you can see, we always go for a marking of important levels initially. So that is previous swing high, previous swing low in the daily time frame. And yeah, we should mark gap orders as well. But currently, I have never experienced for a few days a gap order acting as important resistance or supports. So this previous swing low is marked, and previous swing this one was taken out, and this would be the previous swing low for current market scenario. And let's mark a previous day high and previous day low. Yeah, this was the PDL that has already been marked, and this was a previous day high, which is already marked over here, and this one is previous swing high. So we have been already discussing that whenever the market opens with a big red candle, we have to wait for that to definitely make a shorting opportunity. But as I have discussed yesterday only, such kind of candles will have a huge stop losses. So what we have to do is we have a strategy called red candle retracement. So the same strategy has happened in yesterday's market also, and day before yesterday also, and other day as well. So it is currently we are expecting these kind of patterns a lot in these market scenarios. So yeah, according to that strategy, we have to enter the trade once the candle comes to opening price level of the huge red candles. But the thing is, here there was a breakout. But yeah, this was a weak breakout with a wick, so we should not enter the trade. And also one more reason would be this was a parabolic movement. Parabolic movement is the sense breakout only works where there will be price buildup. That's what we call as consolidation in markets. So here you can see there was a consolidation for at least 2 to 3 hours, and there was a breakout. And yeah, according to the red candle retracement, there was no rejection at this point in time. So so we are not taking these trades. Yeah, and yeah, we have one more strategy which is called as fake breakout strategy. Here, the huge red candle indicates huge sellers are sitting over here. So once their stop loss is taken out, here the stop loss was taken out. But the breakout will only work when there will be a follow up. So here you can see there was a breakout, and again there was a follow up, hence the huge momentum. But immediately there was a doji candle pattern here. You can see it is called a doji candle pattern. That means doji candle happens whenever bulls or bears are not participating actively. So the price is uncertain whether it is ready for up move or a downside move, and later bears took in control. That's what we call as a fake breakout strategy. So here you can enter, and stop loss would be above the doji candle, and target would be 1:2 hour. You can see it exactly achieved 1:2 hour over here. Yeah, that was a very good trade for today in Nifty 50. And you can see that whenever there is a breakout or rejection at previous swing highs or previous swing lows, those are the very important resistance, because that those are the support and resistances happened with a huge rally, maybe either upside or maybe downside. So there was a consolidation and there was a breakout. Here you can see there was a very good breakout. So the trade would be long trade. Here stop loss would be previous swing low, and the target would be 1:2 hour. Yeah, it immediately gave the target. And here you can see this was the another previous swing high that have been marked a long time back. Yeah, it achieved that as well. So you can wait for the when you are uncertain that you don't know the targets. Yeah, here the targets can be 2 hour or the next round levels, which we call as psychological figures in the market. And another things we can also call previous swing highs. That can be our target. Yeah, there are a few more strategies where we don't know the target, means we can use uh, Fibonacci retracement as our target points, but that would be too much advanced for now. And let's discuss with simple basic price action patterns. And again you can see the breakout is supported by one more pattern, which is called as a simple wedge kind of pattern over here. So these were the you can see the price came down, up, went up, came down, respected this trend line, and again respected this trend line. And again what happened here is there was consolidation and a breakout. Yeah, so these were the two trades which gave targets in the Nifty 50 analysis. And let's come to Nifty Bank as well. So the previous swing lows and swing highs, all these things have been already marked. So here you can see that again there was opening with a red candle. So since past few days the opening is always a red kind of candles, we have to wait for retracements. So this is where you can expect a price reversal. The current day's high for the initial build up we have is red candle high, and yeah, there was a rejection. So according to our strategy, once the low of this candle is taken out, keeping stop loss above the red candle and target back to day's low or 1:2 hour. But the thing is, it gave a stop loss. Of course, like stop loss every day is not trading day, and that doesn't mean like we should always go for the trades where we have to we are uncertain that it always gives profits only, but we have to give stop loss as well. That's part and parcel of this trading psychology in order to survive longer term in the markets. And here you can see there was one more pattern which we call as double bottom pattern. So this was top, this was bottom, and again there was retracement, again bottom, again there was a breakout. And this one we call as a neckline in double bottom breakouts. So like if I show that in 1 minute time frame, you can understand that how beautifully it formed a double bottom pattern. So this is how upsell consolidation it happened, a kind of a double bottom. This is the neckline. So I usually trade in what we say 5 minutes time frame only in the indices. That works best for me, and you can trade according to your time frames or the according to your strategies. But for simple price action strategies, we go for 5 minutes. So that's what gave a good result for me. You can follow your own setups. And yeah, breakout candle was used. Like you don't have to keep the stop loss at a very low level, and you can expect a 1:2 hour. Yeah, according to this one, if I go for previous day current day high, it would be very less. But yeah, no matter what the support and resistance, you have to good you are good to go with 2 hour only. So that's what helps in the long run. Yeah, so it gave one more than 1:2 hour. So this was one of a good trade. And the second trade, which was a retracement, gave a stop loss. And one more trade can be like here there was a simple trend line breakout. Here you can see there was a, this was one touch point, another, and there was a rejection at the previous day close. And yeah, there was a consolidation, little bit of consolidation. That's what we call a price build up over here. So this was a simple trend line breakout. So once high of this candle is taken out, we can go for a long entries. So this was our stop loss below this candle, and target would be 2 hour. Yeah, it almost gave 2 hour. And once it achieves your like how we have to book 2 hour risk reward, in the sense like you can see it's not always possible to hold till 2 hour. Like yeah, that's a part of psychology. If you are staying for for a longer period of time, you will get to know more about psychologies. So once it reaches this level, you can trail your stop loss to this level, or you can bring the stop loss to cost, so that even if it goes against your trade, even after achieving 1:1 hour, you can still end up with break even. So that's how the 1:2 hour or more than 1:2 hour can be booked. And another strategy was a simple head and shoulder pattern. So actually this is called as a reverse head and shoulder pattern. So why this is called as head and shoulder pattern means, I think most of the traders would be knowing that as well, but let me make it clear. Because you can see how the person will be. A person will be like, he'll be having a head and his shoulders will be like this, right? So his shoulders will be like this. So like this is the head and shoulder pattern. So this is the shoulder, this is the head, this is again a shoulder. So once this breakout is taken out, once this neckline, this is called a neckline because we here we will be having the necks. So after breaching of this low, you can enter a P trades. P trades in the sense like yeah, I think you will be knowing that as well. So this was like a reverse of that one, is called as reverse head and shoulder pattern, and this was what we say a neckline. So again, if we enter long trades here at the breakout, yeah, breakout was weak though, but the pattern was too good. Because one reason is there was a pattern, another reason is this was a breakout range. So this is where the breakout happened, you can see, which gave 2 hour. So you can anticipate that again there was a entry opportunity over here, because that was previous breakout level. Yeah, those things also works well. with your experience you can enter the trades or re-enter the trades. So again it gave 1:2 r. And importantly you can note that previous swing highs, I say always say that they act as a very good support and resistances. So it was easily achieved. So how you can book this huge targets, like previous resistance would be this one, but there was a very good build up over here. So after the breakout there were continuous green candles along with a little retracement. That's where the retail traders or some kind of profit booking will happen. So that's how the market moves. So after this one there was a retracement, again the trend continuation. So here you can see there was a very good candle. So this indicates that the build-up is very good, so that you can expect or anticipate very good momentum. So you again there is one more indicator that I use to book huge targets. That's called a 9 EMA. Okay, closing until unless the 9 EMA candle is closed, you can trail your stop losses by tracking your previous swing loss. So once the stop loss was here, you can shift to over here, and next you can just hold the trades, or later when it gave good momentum you can again shift or the trail your stop losses over here, then here until this low is taken out. You can stay in the trade, but yeah, that might give a lot of your profits back to the market. So best way to trail your stop loss is, instead of trailing stop losses, that should be done of course, but you can exit the trade, not until not, you should not wait for until low of your stop loss is taken out. Instead of that you have to wait till when the candle is closest below this indicator. So this is where actually it closed. After this breakout you can see that there wasn't a close, because you have to wait for 2 hour only, no matter if it closes or not. So when you have an expectation or analysis the market can go up, you can wait till the red candle closing below this 9 EMA. So yeah, that's how the targets can be trailed for a huge profits. So this was one good of a trade for today. So total there were how many trades, like this was a double bottom breakout which gave target, and red candle retracement which gave a stop loss, and yeah, this simple trend line breakout which gave a target, and along with that head and shoulder. Yeah, like these days like head and shoulder is, I think it may be the favorite price action strategy for most of the traders, I guess, because it is occurring every now and then and giving huge targets. Yes, if you find head and shoulder patterns or inverted head and shoulder patterns, you can easily go in the trade and you can always book 1:2 hour. Yeah, that's it for today. Thank you for watching. If this analysis helps you a lot, do give a like, comment, or subscribe to this channel. Yeah, thank you.